Good morning, folks. Hope you're doing well. If you would be so kind as to give me a 5x5, just send me a post on X. Let me know that you can hear me. I was acting up a little bit earlier today. Wasn't able to see anybody's posts on my timeline. So I'm not sure if you can hear me okay. If you could, just a 5x5 would be fine. Alrighty. Thank you so much. Well, good morning, by the way. It is a good morning, isn't it? Every day above ground is a good day. And I'd like to take a moment real quick just to let you know that don't think that I don't appreciate the fact that you're putting in the effort for yourself to be on a Saturday morning, no less, listening to the old troublemaker pour out 33 years of experience, doing it wrong, doing it right, doing it the best. So congratulations for having the tenacity of coming up here, wake up early enough or stay up late enough, or defer your weekend warrior events to do this. I will promise you today, I tend to go long sometimes, but I have something I have to be a part of today. So I know sometimes I rib you in the beginning stages. It's going to be a short one, 4 hours. We will be very long with this one today. Okay, it'll be under 45 minutes or so. I want to kind of like draw a contrast between two concepts that many times gets confused either by my presentation, which I'll admit sometimes I'm not always the best in terms of articulating when I'm ranting. I'm just basically going where I'm feeling led by at that moment. And today, I kind of like a little bit more focused because I want to draw a very stark separation between daily bias in the marketplace and narrative. And I want to open it up with initially stating that the bias on a market is absolutely not a narrative. Okay, and I've had over the years students come in and say, hey, look, it's the most important thing. What should I focus on initially? Like, what's the first thing as a developing student, trader, or someone that's a break-even type trader? What should they focus on first? And they think it's entries. Tell me how to get into a marketplace. How do I know when to buy it? How do I know when to sell it? What's the entry mechanism that never fails? What's the buy signal and sell signal that allows me to not worry about even placing a stop loss because you're too panicked to get in there and start trying to make money? But you have to first realize the risks. And before you even get to that stage of knowing when to buy and when to sell, or even stop losses, because they're pretty easy. The very thing that you're afraid of the most, placing stop loss and controlling the risk, that's the easiest thing. That's the easiest thing to do. And you can tell, and I was guilty of this in the beginning too. As a 20-year-old, I was afraid to place a stop loss because I was afraid I'd be wrong. I was afraid they would stop me out. And at the time, I didn't think of a collective day, doing the air quotations with that. I just figured that the market would just come back and get my stop and then run without it. And I didn't even have enough experience at the time to warrant that fear. But it just goes to show that that's what we're afraid of. We're afraid of being wrong. We're afraid of losing money. As an investor, as an entrepreneur, as a trader, you got to warm up to the idea that you're going to do it wrong. The market will sometimes just be stupid and do something that you did not expect. Okay? And that might incur a loss. So the bias on a marketplace, that's very simply, are you bullish or bearish? Now you can be bullish or bearish on the daily chart, the weekly chart, and have a very long-term or intermediate term bias. I'm bullish on gold. I'm bullish on equities. I'm bullish on whatever currency you're interested in. But for what time frame are you bullish? Because I could be bullish for 10 minutes trading in a 15-second chart, but inside of a long-term macro bearish market, and I can trade profitably doing that. So many of you are so rushed to try to get into something. You're not giving yourself the adequate time to learn how to trust a bias, and then moving past that to where the rubber meets the road is narrative. See, bias is rather simplistic. You arrive at that on a weekly chart. You arrive at that on a daily chart. Is the market going to go higher to an old pool of liquidity, an old relative equal high, two highs that are real close proximity to one another, and the most recent one being slightly lower than the previous? That's like king. That's where all the retail traders are going to feel real safe if they've been short, placing their stop loss just above that. So I teach you to try to reach for that. And that is simply cut and dry, as easy as you can get for a bias. Whatever time frame that exists on the relative equal highs, that's the time frame that you're bullish. Does not mean you won't have down candles. It doesn't mean you won't have down days in between where it is right now and when it gets there. But all too many times, traders see a down day when it's unlikely bullish. I'm about to just throw everything out the window because it probably just reversed because we got a down day closed down 150 minutes. That doesn't mean anything in today's market. I shouldn't have any, I guess, bearing on what you believe is bullish on that time frame. In fact, it's good that there's down days in higher time frame charts like that, because that's how order blocks are created. The market trades above that down close candle, and it comes back and touches its opening price. And then you have a change in the state of delivery for the short term, but it's already been bullish. You see how quickly a neophyte, someone new, can get lost in the time frames and feel like, I don't know what I'm doing. The sands of time are just carrying me here and there, and I don't know what I'm doing. Why is ICT calling it bullish? Why is he looking for it to go here? Why is he looking for it to go there? Why didn't he do this and why didn't he do that? That's what we're talking about today. Narrative. See, it's not enough to know that it's likely to go up. It's not likely to go straight up every single day when you're bullish. In fact, it's unreasonable. Unreasonable to accept. And when it can be seen, far less likely that it doesn't go up. It's narrative. Out of all the books I've bought, all the authors I listen to, even people that claim to have made lots of money, even my initially, first mentor, Larry Williams, his tools, rather simplistic, but didn't really get to the core of what I was aching for. Was how do I navigate this stuff? Even if I see all the things that I had grown to trust as a brand new student of his, 1995, I had to find my way through all that stuff, because I would overanalyze, I would second guess, I would sprinkle this and that from everybody else that I thought I was learning good stuff from, and it wasn't helping. It wasn't helping at all, because I didn't know the mechanics of what was going on behind the scenes with liquidity, time-based delivery. And that's the crux of what makes algorithmic price delivery what it is. It has absolutely zero to do with how many people are buying and how many people are selling. And it's silly when you think about it, because you say, oh, look at the buyers. They're buying pressure. Here's how you quickly throw that into the bin, okay? You cannot get filled on a long purchase of any instrument at all unless someone took the other side of it. So there's transactions there. They're on both sides. It's funny how everybody misses the idea there. It's going up. No matter how many contracts, how many shares, how many lots are trading. Whatever entity state the other side doesn't matter. It's still the same buying and selling pressure at the same time. But you'll believe the books. You'll believe the authors that regurgitate everything else the books have taught. And it's funny how you're always learning and never coming to the knowledge of the truth. You're never getting there because you're believing the lies and you're drinking from the well that's tainted. If you go in looking for things that are false, not realizing what you're looking for is false, it's flawed logic. And it's easy to grow accustomed to saying, well, this game is random. It's not an even distribution of buying and selling winners in my trading. I have to always be willing to see the market go into states of randomness. And that is other. Everything's in here. Down to the tick. Proof of that is you can see it before it happens, and where it trades right to a specific level, down to the quarter point or it stops. And one has to admit, either the world collectively is listening to little old me, a nobody from Middle River, Maryland, and they're all marching to the beat and drum, the Pied Piper playing, and they're buying, they're selling, they're stopping exactly where I said that level should be sensitive. Or, and this is the truth of what it is, the market's your risk. And they're set to that level by algorithmic price level. It doesn't matter. All of a sudden, nobody wants to buy above that tick high. No one wants to sell below the tick when it's been dropping, right where we say it's going to go to. Isn't that odd? Isn't it odd? Okay, look at your level 2 data, those that believe it. There's still orders above these levels. Why aren't they getting tagged? Because they're not part of the party, folks. They're not being invited. You're just left outside. The 501 Club, the people that are in the mix right now, they're in there. They're moving and shaking. They're in there. They have been ushered in to the highest place right now. That's the volatility in the marketplace right now. They're in there. And you always have people that are outside waiting for somebody to get tired and go home. So they can allow them by fire code to let more people into the party. They're trying to usher in. Hey, look, bro, please let me slip in. I'm at my quota. I can't let by in. Think about it like that. Why aren't these moves getting that 1 quarter tick past it when there's 300 buyers? 300, 500, just beyond where we said it's going to go. And it says, can't come in. See, you've never went to the marketplace looking like that. You never investigated those things like that because the books never told you to think that. Just like when you go to school, they don't teach you how to be an entrepreneur. They don't teach you how to be your own business person and pay less taxes. Get paid to spend the money that you made through your business and then pay less in taxes than somebody that makes even more than you in a salaried job. You're going in ill-equipped, ill-informed, uneducated, and I'm raising my hand right now because that's exactly how I started too as a 20-year-old. In 1992, I absolutely had no idea what I was doing. Zero. And scared. And every time I went in and I was buying, I really didn't know what I was doing. I was very anxious. I could not afford to lose any money. And the times that I was wrong, I didn't understand how the market was going to come back and take the sell stops. Anyway. I'm thinking, okay, I'm going to wait for it. That was the finding my way actually to understand the concept of a narrative. Because I was a perpetual bull. Not because that's better than anything else. Not because Larry Williams said so. Not because anybody else I was reading the book from said it's the only way to make money to go along. Remember, I was trading commodities, grains, cattle, lean, live hogs. Think about it. Those markets are not just like straight up or straight down. They're all over the place. They have real supply and demand factors associated with them. Not like equities, not like index futures, not even like currencies. That's artificial. But the world's grocery store, commodities, they have a real value. They're always going to have value. They're never going to zero. Bitcoin can go to zero. Cattle prices will never go to zero. Everybody has their cheap trick. Okay? Sometimes it's big. But narrative tells you as the trader, is it really the right time to be buying when my bias is bullish? And narrative is the definition of how that time frame that you're looking at is going to deliver to whatever target you arrive at in your analysis. Case in point would be this. Let's assume for a moment you're bullish on NASDAQ. Okay? And you look at the weekly chart and you feel like, okay, it's going to go higher. And I think it's going to go up 600 to 700 handles from where it is at present. I'm not saying that's the case for right now. I'm saying hypothetical. Because I know you're probably listening to it on somebody else's YouTube. And there's no reference to time. Okay? So don't listen to this thinking I'm applying it to present market condition at the time you're looking at it in the charts. It's a pattern. Hypothetically speaking, assume that you have several hundred handles that you think the NASDAQ is going to deliver to over the course of 1 or 2, 3, maybe 4 weeks of time. So you're going to submit yourself to 4 weeks of time for that target to be delivered to. There's a relative equal highs up there. There's a fair value gap, something other than balance. There's your reason for going up there. I think that's not the most important thing. The important thing is, now that you arrive at that bullish bias, how will every single daily candle paint? How will price book on the daily chart? Where will it open be? How will it close that day? How will it close between Monday and Friday? Where's the low from? How much can it move for that particular and still be bullish, but not deliver it all in one shot? See, these are all questions you have to have, kind of like a checklist. Now, I used to have a checklist. It used to be a long, like a pre-flight list of things I would worry about. And I shared it before. And you're going to ask for it right now. And I'm sure somebody that has collected everything ICT has it and will probably share it. That's okay, let them do it. It's fine. But it's as simple as this. Every session, that is the London Open, that is the Asian session, all of those Asian sessions have perspective. Also have their own time-based range, where there is what it's going to do in that segment of time. And they're like puzzle pieces. Think about it like this. Anyone that does jigsaws, and I love jigsaw puzzles. I'm a problem solver. I've always invested in puzzles, and I've collected jigsaw puzzles since I was a young guy. And the more pieces there are, the more I love it. And anybody that's ever done anything with jigsaw puzzle knows that you gather all the smooth edges, those pieces first. Doesn't that sound similar? Doesn't it have echoes to something I've already been teaching? Find that where it's smooth, okay? And then when you get all those smooth pieces, what are you doing? You're making the border. The furthest extreme of whatever that image is that makes that jigsaw puzzle representation. You build that border first, and then start working your way in. That's the secret to a jigsaw puzzle. You find all the border pieces first and work your way in. Well, when I teach you read price action, what do I tell you to look for? Smooth. Look where it's smooth in price, because that's where it's going to disrupt it. And here's the wonderful thing. That occurs every session. Every session. But you're looking at it just for the daily range on a 15-minute time frame, or you're looking at it from low to high, only one pool of liquidity. It's all that's going on right now. It's only going to reach for this one. And that's fine in the beginning. It's absolutely fine. That's the proper way of going through it. But if you stay there and you stagnate that perspective only, looking for whatever the closest buy side at 9%. That's how you should start. That's a low-hanging fruit objective. That's easy to get to. It's a quick, easy reward. It's an attaboy, attagirl kind of fashion. Feedback. The instant gratification of seeing it deliver like that, that is important as a developing trader. But it's not all there is. It's not all there is. The reason why I teach the lower time frames is because it gives you greater detail. It gets you down to the microscopic level, like someone that is an engineer. And they study structures, real structures, steel bridges and whatnot. And they don't just walk around and look for bends and cracks. They're looking really detailed because they see stress fractures that are forming that you just won't see. It'll make it up. So what are they doing when they're studying that bridge? They're looking at the lower time frames, the microscopic level. They're looking for stress fracture. Well, in price action, when we're going sub 1 minute, already somebody goes, okay, lots of teaching material, lots of study material. You see it every day, not just one time and wait weeks and weeks and weeks for a daily chart. Don't be stubborn as a student. If you're stubborn as a student, you won't learn. You have to be always ready at the moment to learn something. What I'm telling you is fractal. That means everything that I'm applying to, let's say, a 15-second chart. All those things happen on a 4-hour chart. They happen on a daily chart. They happen on a monthly chart. They happen on a yearly chart. Okay? So don't get yourself all that out of shape thinking, oh, this doesn't apply to me. So let me just excuse myself. Don't do that. If you look at a sub 1 minute chart for the session, what's the session? It's an hour and a half time. And no, it's not a 90-minute cycle. It's just a block of 90 minutes. If you look at sub 1 minute, you're going to see lots and lots of relative equal highs and relative equal lows. And you'll see how the market gyrates and clears those and then moves in the direction you thought it was going to go, assuming your bias is correct. So narrative affords you the understanding of how on these smaller time frames, 1 minute, 5 minutes, sub 1 minute, how they're going to go intraday and seek the liquidity. You do not need level 2 data. You don't need it. You don't need volume profile. You don't need all that other stuff. PSA. All that stuff, it's no different than a Bollinger Band or an EMA, exponential moving average. They're just gimmicks. But you know what I'm teaching has no gimmick to it. It's liquidity. And I'm teaching you how to not even spend that much time worrying about if you're right or wrong about where it exists. Because they're always going to be below a single low and even more so below closely correlated lows. That means they're very, very close in proximity to around the same price. And the one that's most recently formed, if it's a low, it's going to be slightly higher than the one previous to it. That validates it. That's a prime candidate for a liquidity run. Rate it and rip and go the other direction. That's narrative. How does ICT buy it there? Why didn't he use that right there? Why didn't he buy it there? Why didn't he look at this as the market structure here? That's what I'm answering. Now, a new student, this lesson admittedly will go right over your head, but I promise you, bookmark this on this. They're going to put it on their YouTube channel, and I give them permission. But this is my gift to all of you. I could talk this talk on my YouTube channel, but that rather than instead of doing it. But because I don't need the money, and to prove that I'm trying to teach you the purpose of simply helping, and the teacher is edified by doing it. I know this is reaching you. I know it's helping. But don't be frustrated if you're relatively new and this feels like it's going over your head. The people that do put it on their own YouTube channel, could you please just make sure you post the link? Don't do it 50 times in the comment section under this. It's just one time is necessary. Don't spam it. So that way folks can watch it on your YouTube channel, and you can pull up subtitles and do all that stuff and not worry me about it. But come back to this lesson when you get a little bit more experience. About 2 months experience. If you're brand new, about 2 months of watching my material and what I'm pointing to before it happens. Then this lesson will mean much more to you then. But the brand new upstart, it seems alien. It feels disconnected. But for the folks that have been around for a while and been around the block with me, you understand there are fair value assets I won't touch. There are order blocks I'm not trading. I'm finding the ones that make sense right now because I'm trading with proper narrative. I know I'm bullish because I've made it very cogent to you. It's going higher on the daily chart. Here's where it's going to go to. And isn't it wonderful it did it again this past week? I was a little nervous the previous week. I was afraid it was going to work this past week. Oh, Michael, behave. This guy's full of himself. But knowing the high and the low of the session, each session, as we close the morning session, call it 11 o'clock in the morning Eastern. So 9:30 opening bell, equities. Go through that range. As soon as 11 o'clock hits, go down to a 1-minute chart, screenshot it, and then go into a 15-second chart. Now, I understand some of you don't have a 15-second chart. This coming week, I will post them for you. Okay, I will post them in the Telegram channel. So I will give you the same canvas that I'm going to use. Your homework this week is to use the charts I'm laying down for you in the Telegram channel. You can find that Telegram channel on my YouTube. Go to the channel description and right underneath, if I'm mistaken, I apologize, but it should be right below or above the link that takes you to my X account, aka Twitter. That way you know you're using the proper Telegram channel. If you're watching something in a Telegram channel, they're offering you investments. I don't see what they're doing. That's not me. I'm asking partnership. I'm not offering investment. I don't create cryptocurrency. So there it is. I'm not asking you to send me money. Pay me, right? So if anybody does that and it has my name attached to it or my image, it's a fraud, it's a scam, don't believe it, just get away from it. But the charts I post, I want you to do what I'm going to tell you now. And then I want you to do this every day as a trader. Because this is what I do. You want to know how I see price? You want to get good at it like I am? You're going to do this. The session closed at 11 o'clock Eastern time. I don't care if it continues going higher. I don't care. That's not what we're talking about. But you have to encapsulate that jigsaw puzzle. You got to get the border pieces first. 9:30 to 11 o'clock. You can make all the money that you would ever dream of in that 90-minute period of time. I promise you, you don't think so. You think you got to swing trade. You see these guys, yeah, man, nobody can trade intraday scalps. You know how nobody scalps and makes money, bro? Why are they ignoring all my students? Why are they all ignoring your profits that you're openly showing? Why are they ignoring that? Isn't it odd? It's odd that everybody else outside of our group turns their cheek like, oh, it applies to everybody else. So let's not talk about them because they're just a cult. And we are the cult. We do things differently. And by taking that 90-minute period of time from 9:30 to 11, when you're bullish, while you were bullish, now, in the beginning, you're only going to have the bias that I put the share. And there's nothing wrong with that. That's what I'm doing. I'm lending my experience. That's why I do it. Because you don't know what you're doing. And you're going to have a whole lot of time worrying and obsessively conversing with yourself internally with a dialogue that is self-defeating. You're going to worry about things that don't have any bearing on what price is going to do. And you're going to be worrying about the thoughts versus watching price action and gaining the experience of saying, okay, I'm neutral. I want to watch to see what it does. That's the missing piece that every failed ICT student, every trader ignores. You have to discern how you internalize what's going on. As soon as it runs 10 handles, you're thinking it's going 100. I'm missing out. FOMO, fear of missing out on the move because you saw something sporadic. I don't feel that. I'm not looking at price and saying, wow, where did that come from? Oh my goodness. I'm not thinking like that. I know what I'm looking for. Look at the comments when I post my same thing, when I call the right line. And the first thing pops up is, how did you know that? How did you know that? Lectures like this, where I talk a lot. Because I'm filling in the space that you're going to free up when you take rid of all of that toxicity that you're thinking, that would-have thinking, that scary stuff that you're thinking about because you don't know what you're doing. And I'm not trying to be condescending and talk down to you. It's normal for you to not understand what you're doing. It's normal for you to worry about what's the bias, what's it going to do, what's it going to do. I just want to get in. I want to make money because if I can't make money, the people that I told foolishly before I learned how to do this, they're going to be asking me, how you doing? What am I going to tell them? You tell them nothing. You tell them, I'm still working towards a goal. That's it. It completely diffuses the whole conversation, and it takes you right back to anything outside of that. But that 90-minute period of time, that's your border of that jigsaw puzzle. And every day, you want to go back through that on a sub-1-minute chart. And you're going to start seeing details that completely eluded you up until. See, when I'm showing you my recordings of me doing executions, my trades painting out here, I'm looking for this and looking for that. I've said this before, I'm not hiding it from you. But if I'm watching 12 monitors, how could I possibly have all 12 monitors and the perspective that I'm gleaning from all of them collectively in a cohesive manner to say, okay, this is how my brain internalizes what I'm explaining to you today. Settle down. Some of you are like, get to the point, get to the point. I am getting to the point. But I have to smooth the playing field for everybody that are constantly looking for things as a distraction or talk themselves out of it entirely and not realize they're doing it. Because you want to learn it right away, real fast. Give me the real fast version of it. Can't find the fast version of it. That's why I do these discussions with you. I don't monetize them because it kills the whole thing of you're just drip, drip, drip. Instead of saying it in 5 minutes and being done with it. You can't encapsulate 33 years of experience inside of an hour long, even a 4 hours of read. Can't do that. Ask any professional that's highly upper tier in their profession. Whatever they're doing, they're recognized for it. They can't come to you and say, hey, this is what you do, this is what you don't do, and do it in an hour, and you walk away and you never need to tap into them again. You can't get that. It can't be distilled like that. And the menu today is everybody has a market. And they tap into me because they know I can talk for a long, long time. And for people that aren't trying to learn, they don't appreciate that level of depth. Because that depth is what you're lacking. That's what's missing from every book out there. That's what's missing from every other mentor that's teaching you trading or reading price action, because they don't have the experience doing what I've done. They would come forward and do it if they could. They don't. They're in here listening to me. You take that sub-1 minute chart and you go through it. When you're bullish is bias, you look for the time that it makes relative equal lows. And you record that. Then you record how far higher it moves away from those relative equal lows before coming back down to get them again, running below them. And you want to mark the time it does that. And you start doing this every day. Every day. You're going to see things that you never saw before. Your subconscious is going to see so many opportunities every single day for weeks and months and forever, as long as you're a trader. That perspective is going to unlock why I'm picking that specific 1 minute candle. It's going to unlock why I'm waiting. I'm not yet. I'm not interested yet. And you're also going to see time-based price runs that they cannot fucking hide from you. They can't hide it from you. If you're looking for it, how are they going to hide it? The price is going to move, period. They're not going to be switching prices and time deliveries all the time. They can do it for a short period of time. They can do it for a short period of time. But don't lose your mind and think, oh no, they changed everything. They finally caught on to ICT and they're changing everything. If you only knew how many times over the 20 plus years of me having a face in this industry where people could say, this guy says this, this guy says that. And if everybody starts doing it, ICT's methodology is going to be the new retail. There's still people bloviating on position thing. It's nonsense. Because what I'm teaching you is the heart of what makes these markets go up and down. What time is the market open? At Woody Bell. For electronic trading hours? I'm sorry, for regular trading hours? 9:30 Eastern time. Can they hide that from you? Yeah. How about 11 o'clock on the dot, not 1 minute before, not 1 minute after? Can they hide the time of 11 o'clock Eastern time from you? It doesn't matter if you're in another time zone or not. That time is a static. It can't change. Not going to reinvent the clock. Think about it. You're worried about things that are completely outside the scope of reasonable. So if you're bullish and you think that the market's going to go several hundred handles because the weekly chart implies it, well, everything keeps going up and every down close candle supports price. So order flow is bullish. See how easy that is? I don't need an order flow on level 2. I've already made a mockery of it several times, even in this presentation, because there's many orders above and below the daily range that never get tagged in. But there's certainly hundreds of them sitting there, and they never grab them. They never yank them in by their lapels or by their hair and drag them into the party. They're leaving them there. Because that psychological impact of, I want to get out of the trade. I want to get my target, and then you pull it back against them. What are they going to do then? Start lowering their willingness to get out at a lower price. And that's where your bearish fair value gaps come in. See, that's the reality of what's going on. But narrative is, how will that daily range develop? At what time will the daily range create the low? At what time will it create the lunch high? And how will that high or low during the lunch hour be utilized starting at 1:30 Eastern time? Because that closes that lunch period. It's a 2-hour window from 11:30 to 1:30 Eastern. Inside those 2 hours, the only thing you're looking for, this is time to write stuff down. Between 11:30 and 1:30, you're only interested in what has happened in the morning. What has happened in the morning? Have we gone up? Okay. Here is a perfect intraday bias. I said perfectly by saying it's perfect. Even if the market is going to reverse on you and you're trading inside of a market that's primarily bullish, this will work for you. If the market's bullish and it's going to continue in the afternoon, it's still going to work for you. The only time it will not give it to you in terms of an opportunity is when you have this one shot bat out of hell. It never turns around. It just keeps going up and up and up and up or down. How many times do you see them in a month? Some of you don't even know. Some of you don't even know how long it takes before one of those days form and how frequent. They don't happen. But isn't it funny how you get into a trade and you think that that's exactly what's going to happen that day? Or you think it's going to go in your favor like that, but it doesn't become a situation. That's what you're thinking. That scares you. Or the first one is enticing you with greed. So you think every day is going to be like a bat out of hell. It's going to go straight up, straight down parabolically. Even knowing that that's a fear for you, you still lose time. Does that make any sense? No. I'm afraid that the market's going to tear my head off and use it as a soccer ball. But I'm afraid to put stop loss in and protect my equity. You're not a trader. You think like that, you do that, you're not a trader. Don't call yourself a trader. Don't even post your payouts because you're not trading, you're gambling. And gamblers get to do that for a period of time until we are not allowed to do it. There is a distance. You have to know what the London previous Asian session, pre-market, liquidity is. Now, I walked you through that distance. I gave you an example of going through, look for this liquidity, look for that liquidity, put it on your chart. And then I gave you a key, a chart that shows those very levels this week with my reviews. Is that complicated? Is it complex? Am I hiding something? Am I contorting the logic to make it so it's never achievable in your own hands? No, of course not. Of course not. At 6 o'clock Eastern time, when they start things up, and let me put this to bed real quick, okay? I taught you several forms of gaps that are not standard theory in learning in the industry. If you recall how we have a close at 4:14. For all you folks that are freaking out, sending me emails that I'm not reading, because your title's telling me everyone knows you see it, or leaving comments on YouTube channel. What are we going to do when they keep trading 24 hours? Oh, we're going to do. I'm going to quit. I'm going to quit, and I'm probably going to start selling used cars and starting OnlyFans. That's what am I left? Nothing after that, right? I mean, all of my trading hinges on that little separation between 5 o'clock and 6 o'clock. I mean, what is ICT without that, right? Folks, relax. If you take the closing price When price no longer delivers, quote unquote, to the pits when they were active, the final settlement price. If you take that and you apply it to 6 o'clock's first tick, I don't give a fuck. That was attention. Some of you are sleeping. I don't care if they keep it going. I'm going to still use the first tick opening price at 6 o'clock. All they're going to do, folks, is hide it that way. That's all this is, okay? It's smoke and mirrors, baby. I got shit. They had no idea what I got. They got no idea. Those separations between that price at 4:14 and 6 o'clock's first tick, that is still going to be, whether there's a separation of trading or not, it's still going to be influential price. You fucking watch. You watch and see that it isn't still there. Everybody else, until they heard me say here, they're thinking, oh, it's going to go away because you're changing everything. They ain't changing shit. They can't change it. The market's going to go up and down. There's going to be inefficiencies. It's always going to be there. See, I'm making millionaires with these simple little gems I'm dropping here and there. Telling you, watch right here. Screw everything else in the daily range. Focus here because it's a magnet. It's going to draw price in. You think it's going to say, let's let price just tick along, keep going. Don't close it at 5 o'clock. Keep it going. We're going to screw all of them. No, you're not. You're going to screw people that don't listen to me because they won't see it. But it's still going to be there. Don't believe me? Don't believe me. I want you to hold that down. Because when the shit still starts to keep working and I'm pulling out trade based on it, and it's going to be as precise as everything else I'm doing, you're going to be like, what in the hell? Right. Because it's the daddy talking to you. They can't do shit. They can't do nothing. They have to let price go. It's going to happen regardless. And they cannot stop you. They cannot stop you. They can't prevent you from seeing this. They cannot hide it. Sure, they can go in there and cause the market rip up 80, 120 handles, boom, out of nowhere, just like that. Sure, that can happen, but they're not going to do that every 15 minutes. They're not going to do that every hour because that volatility is going to cause large pools of liquidity. Step back, say, just settle down for a second. See, high volatility can only exist for a short period of time. And as part of a narrative understanding, you have to have that in your understanding. You cannot let that freak you out. You cannot let some kind of a surprise price rip that comes back for liquidity, rips their head off, and then starts going back in the same direction it's going. See, you're afraid to do that if you're afraid of that. If I get stopped out, I'm afraid. Because I can identify what that was. Oh, yeah, okay. No problem. No problem, Phil. Phil's behind the screens, pulling the strings, watching ICT on X and listening to him on his live presentation right now. Taking notes where I'm going to screw him here. I'm going to change this. Phil, you can't do shit. You can't do shit. You can't do anything except for widen the risk momentarily. That's it. And that can't happen every day. So that means, guess what? You might get stopped out. You may incur a loss. But for me, I'm going to go right back in there, take the next TD array, and I'm back in. I'm going to do it again. I'm going to wait. What am I going to wait for? In inversion fair value gap. It's always going to be there. It's always going to be there. That's confidence. It's arrogance. No, it's arrogance. It's confidence. I know what the weather's going to be. The third Thursday of June. I know what the weather's going to be in the marketplace that day. I know what the weather's going to be in the marketplace for NASDAQ on any trading day there is. What are they going to hide from me? Nothing. They can't hide anything from me. And you need not worry. I told you in the beginning, you're in good hands. I'm not charging you anything to give you this information. The doubters come. I love it when they come because you see it just like I do. And then you watch them and their opinion. So what I'm saying happens. Never be thought. You should be encouraged by it. You should be encouraged by the doubters that come here and stay in my comment section and say, oh, this stuff doesn't work. And it does. Every day. Taking that 90-minute window, 9:30 to 11 o'clock. See how I test the patience of what one. Dude, just say what you got to say. I'm saying exactly how I want to say it. Sub 1 minute, 15-second chart. You can do it with a 30-second chart too. But I like 15 seconds because I'm teaching you this is how I do it. So you're probably being compensated financially. You would want me to tell you how I'm doing. Well, I use 15 seconds. I look at relative to the lows and upper bush on 50-second chart, and I want to see what time they go down below that now. Then I want to see also how frequently it does it. You're going to find that within every hour, there's a range that you do the same thing beyond 9:30 to 11 o'clock. And that's why I told you, I don't need a daily chart. I don't need to trade with a 15-minute time frame and wait for sales to form there. I don't need just a 1 minute fair value gap. I can use a 60-minute candlestick, any of them, during active trading, even during Asia. I can trade inside that 60-minute window of time and treat it just like a daily chart. Now, sure, I'm not going to get 150 handles, but I'm going to get the lion's portion of that hourly range using what I'm teaching you here. For the new people, you don't get what I just said. You have no idea if it's put you in over your head. So I said, bookmark this lesson. Because the things I'm talking about, you're going to know more about price action 2-3 months from studying what I taught. Then you go back in and you start looking at these things. It's going to be like, what the hell is going on here? Like, this is obvious. This is so obvious. You're going to want to run through a brick wall because it's going to feel that empowering. I am not afraid of missing anything. I am not afraid of missing shit. They can't hide this. Exactly. Exactly. That's where my confidence comes from. See, people that are weak-minded, little dick energy, they come here and they literally can't stand it because they're shitting themselves every single day when these price charts are going up and down. They have no idea what they're doing. But you do. You do. You know what you're looking for. And you're learning more now. Narrative is this. When your bias is bullish, you're expecting the daily close to start working towards higher levels. Emphasis placed on moving towards. It need not close on the high. It need not close above the opening. How many times have you seen in previous market moves where the market is bullish and you see an opening, small little shadow or tail below the opening price into the chart, and you stick, then it rallies up, and then it closes slightly below the opening. That's fake. That's fake. They know there's a lot of Steve Nielsen cronies out there that say, ooh, look at this, it's a doji, it's a dragonfly, it's a gravestone doji, it's a whatever you want to call it. It's topped. It looks toppy here. Look what it did. It's rejection. And they're going to look at their indicators and what are they going to see in the indicators? If I keep twisting the data and beat it up and keep putting different settings on it, I'm going to eventually see a bearish divergence. And hot damn, there it is. The market's top out. You know that stuff too. I'm not making fun of you because I'm being mean. I'm remembering what the dumb shit I did. The market will gravitate bullish targets over time. Narrative is, how are we going to make that daily range form? I told you to look for the Asian session lows. Start the Asian range low. And that's always a candidate for them to take down the market below that before it goes. Not a lot of times to see that. But before I close this session, I will tell you when they do. You have to know the London is open. We'll call it 2 o'clock to 5 o'clock in the morning Eastern. Where is the single low, or ideally relative equal lows inside that window of time? Many times you're going to see it go for that. More times than anything else, it's going to go for that. Then you want to look at the 7 o'clock in the morning Eastern time to right before the opening, about 9:30, and find the relative equal lows in that period when you're bullish. Now, everything I just said there, reverse it when you're bearish. When your bias is bearish, you're expecting prices to go lower. What pools of liquidity should I be focused on? Asian range, Asian session, relative equal highs. And that means basically start at 6 o'clock. I'm giving you 6, but technically it starts at 7. Daylight savings times, which I wish they would just do away with that shit. It's the stupidest thing they've ever done, but sometimes you don't even observe it. And that's what causes these little blurry areas of price action, because there's people trading with big size, and they're going to be placing stops above or below these periods of time relative to daylight savings time. And that's why there's this period of time of about a week, maybe a week and a half, when we transition from daylight savings time to moving back to non-daylight savings time. So with my kill zones, that means that the windows of time I'm operating in, I expand it 1 hour, and I just always work with that. That's why you're always seeing this. One lesson you'll hear me talk about the Asian session or the Asian range being at this time and that time. Initially, I taught it as a static time. But over time, I got more comfortable revealing more stuff that I didn't want to teach you everything. And I still haven't taught you everything. And I never will, really. And now it's going to piss you off, but I don't care. If I could stop. I could have stopped 10 years ago, and you hadn't. But I guess some of you guys are just maniacs like I am. You want to know everything. But at 6 o'clock to 9 o'clock, there's 3 hours there. If you want to be a purist, 7 o'clock to 9 p.m. Eastern time, there's your Asian session. Okay? Inside that period of time, that proves it's not a 90-minute cycle. Okay? You're going to do the same thing that I told you at 9 o'clock in the morning. I'm sorry, 9:30 in the morning to 11 o'clock in the morning. Everything is always Eastern time. Whatever time it is in New York, that's what the algorithm is for. I don't care. Anybody says that Wellington begins? No. Nope. London's the central hub. Nope. 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 Midnight opening price. There's your beginning of the financial day. Everything is relative to where that thing opened up there and where it moves highest and lowest for 30 minutes until 12:30 midnight. That's an opening range that sets up moves for London. If you want to get technical, if you really want to dial it for London, 1:30 a.m. Eastern time, 2 o'clock for sure. That will help further. Help all of you. Price action to the next spot. Then at 7 o'clock in the morning to 9:30 in the morning, that's pre-market session trading. That's before the opening bell. It's after London session opening. Post Asia's lunch. I'm sorry, Asia's close, rather. And then what do you have? A small little window of 2.5 hours. And you're going to do the same thing. 1 minute chart, sub 1 minute, 15 seconds. And you're going to look, when you're bullish, look for relative equal lows on that 15-second chart. Note when they form, what time are they forming, and how long does it take before they, how long does it take, how far to go up, and what time to come back down. Start seeing time-based deliveries that are within a 15-minute envelope that always repeat. And that just doesn't happen. It's behind the same pressure. They can't, folks. Nobody's thinking about like that. Their circadian alarm clocks are not kicking in and saying, you know, I haven't done a trade in 15 minutes, let me take another one. They're evenly distributed all of the price movement to afford the influx of trades that are coming in before that 9:30 opening. So they can't take every possible buy order and sell order and funnel it in just in the first couple minutes. It's impossible because the market's moving. And there's limitations placed on these large conglomerates that push their orders into the marketplace. They have to get their price, folks. They're not like you saying, well, shit, we've had an inversion fair value gap, and then an order block formed, and then there's a propulsion block, and then there's a fair value gap, and now it's formed an inversion fair value gap. This is probably going to go up now. So let me get in there now and chase it. They don't do that. They have to get deep discount pricing. Because that deep discount pricing affords them to spread that purchase into those areas I just mentioned. They push as much as they can on the run below those lows. And then they wait for these imbalances. And they push them. That's what markets do, folks. When your trade works out, you just happen to be on their coattails. That's why knowing what you're looking for is paramount. And what is not in the chart, but you want to have happen, don't try to be ahead of the setup. I've blown so many accounts. I lost fortunes doing that as a young man. Getting this case of I'm a hotshot. I know everything. I know everything. I know it's going to go up, and I know it's probably going to give these little wiggle waggles I'd like to see. But guess what? I'm going to be before that even forms because I have an ego. And then I didn't have an ego. That wasn't pretty bad. I just laid on his ass. Lost money chasing the idea that it will form, but I'm going to be in there for it. That's impatience. That's me loving winning. That's me loving the profits. That's loving doctor salary trades. I want another one. Damn it, it's been 45 minutes since the last one. I'm going to go in again. There's no reason to get there. Guarantee it helps. It helps calm you down. It's okay. I understand the market's bullish. That's not narrative. Narrative is how are we going to make this bullish candle today? And it need not close bullish. Remember, if you see these candlesticks that open, trade up when you're bullish, but they have a lower close below the opening price, that looks bearish to retail traders. That looks like buying pressure has been stifled. Selling pressure increased. That's bullshit. All that is the market coming right back down to redeliver at a discount price. And what many times will happen is you'll see at the restart at 6 o'clock, it'll be a slight back high. Yeah, so that. Sorry, that. Low during the limit session. And then 7 o'clock or 9:30 in the morning Eastern time, they'll come down, rip through that, and every trader in the world's going to think, ha ha, here it comes. Look out below. They'll start posting on Instagram. They'll start posting in their Facebook groups. They'll go on X, tell everybody, oh, yeah, you to watch out. Here it comes. Lower prices, baby. Woo, we're going to see who separates the men from the boys because only the smart people are selling short. And I'm going in there and buying. And then suddenly, in the afternoon, they're quiet. And I'm saying, that was random. That's my life. You don't need to see a day in life video. I do it every day in front of me. It's just that boring. You want me to add all kinds of stuff? It's like, here I am walking into my car. Here's what I'm eating for breakfast this morning. That helps me more money. Here's the pair of pants and shirt. I'm a fucking contrarian woman. Don't you understand? I'm a trendsetter, baby. I'm not trying to fit in. Bullish. Less likely, Asian session low. Less likely to take them out. When is it likely that it will do that, ICT? Can you help me there? Yeah, sure, no problem. When there's a 10 o'clock news drive on the economic calendar, if you do not look at that, and those are the two primary ones. Also, data sets. By having a 10 o'clock news driver or 9:45 a.m. Eastern Time news driver, that means a report. That's a red folder. You're likely to see Asia's lows get taken, especially if there has been a modest increase moving higher since Asia. You got to look at what has happened prior to 9:30. If it's a straight up run higher, it almost looks like a 45-degree angle, okay, chances are they're going to come all the way back down on that red folder news event at 9:45 or 10 o'clock. So don't be in there trying to get just a gap close on the opening, or don't look for the simple little it dropped down one standard deviation of this or that. No. Narrative says, I'm going to wait and see. Are they going to tear the heads off of everyone that has a stop loss below, which is low? And I look for Asia's lows when there's a 9:45 or 10 o'clock red folder event. Red folder, not medium impact. Red, high impact. See how important that economic calendar is now? It's like the TV guide from the 80s and 90s. A lot of you kids don't even know what that is. You got to give it to go on the screen. Go to this channel on your paid programming, and it'll tell you at this time on this channel, this program's fun. We used to have to get a little magazine every week. Tell us that. Well, you have that same function in trading with the economic calendar. And many of you don't even know what to do with it. You look at that and say, oh shit, this red folder, I'm not trading today. I was like that too. I was like that. But how you navigate through that is with narrative. When do you use London sessions? Medium impact or no impact? Where's your draw liquidity? Where's your target? Where's your terms? Where do you think it's going to get to over time? Where are you at in proximity to that entire range? Because that implied dealing range is undelivered so far. It's pending. So where are you at that moment in the grand scheme of things? If we're in a discount, it's likely to go down to London. It's not likely to go to London when you're in a premium, because it's not going to offer discount pricing to retail risk. Then it will always work with just the pre-market session, 7 o'clock to 9:30 open. And folks, if you don't know what the fuck I just gave you, that's the keys to the kingdom from narrative and bias. I just laid it down. It's given to you, and you cannot hide it from you. Very specific rules, very simplistic rules, but not for the new trader, not for the new student. Someone that's all hopped up on volume profile and shit. That's why you're always going to have the privilege of being on the other side of my fucking trade when I'm with you. Because you think you know something, because it gives you these little things on your chart and you feel informed. I got nothing on my chart but time and price. And I'm telling you where it's going. Look at what you just watched just this week. In a market that is highly manipulated. How do I know it's highly manipulated? How do I know that? How do I know when to expect this and that? Well, first of all, everybody understands now, especially since last year, if you're listening to me, either you learned about it beforehand, or you certainly know about it now. Opening range gaps. Often how often are they showing the natural gap that's existing on the daily chart? They're leaving big pockets of the price. That's heavy manipulation. Huge amount of manipulation. So you have to be very nimble intraday. If you're not nimble, you're going to fall victim. And there's some pretty respectable names that have been, I'm going to give you, I'm not going to name them here because I don't want to take shots at them. But if you recently, in the last 2 weeks, have came forward publicly and said, hey, you know what? I got to be honest with you, man. This market has been tough for me. Or I blew my ass out in my accounts. They're gone. I wasted them. I have to reset. Let me tell you something. If you're feeling demoralized by that, shake that shit the fuck off right now. Shake it off. Because I'm going to tell you something. For 33 years, I'm not saying I'm the longest dinosaur, okay? But I guarantee if you get somebody that's older than me that's been doing Larry Williams, I guarantee if he came forward right now and said, okay, there's still difficulty, 1 to 10, 10 being fucking nearly impossible. Where are we at in the grand scheme of things from your perspective? 55 or whatever it is, I don't even know, guys, you've been doing it forever. Been trading since 1970s. What is your opinion in terms of the difficulty right now? And all the things he's seen, I guarantee you he'd say this shit is wild. Like we've never seen it like this, folks. And these 20-year-olds that run around and pretend like, oh, nothing's changed. Dude, you have no idea what the fuck you're talking about. You've never traded in daily ranges where if you got 6 handles in S&P, that's a big fucking day. 6 handles, 24 ticks. That was a big deal day, man. That's literally 5 minutes of trading right now on a slow day. That's the monstrosity of we're dealing with that as traders. In one way, it's wonderful, it's intoxicating because there's so much movement. That entices you. Get in here. You have to have levels of deferring when you're going to take the next setup, the next trade. Just because you think it's going to move right now, you need to ask yourself, am I feeling that because I want to do something because I'm patient? Or is my model really perfect? Because you're getting addicted, like a gambler does to a casino. That's why there's no clocks and there's no windows in a casino. Because they want you in time distortion. They don't want you realizing how much time you've plopped your ass down and you're just waiting for the eventual win. Keep plunking down your wrist. Keep feeding the machine. Keep playing that card that it dealt to you. It's going to happen eventually. If you stick in it long enough, it's going to happen. You're going to get a win. And even if you get back your losses and you won't be smart enough to walk away then, you're going to say, I'm on a streak. I'm going to push it again. That's the same thing that happens in trading. And the unfortunate thing is all of these influencers, whether they're great at trading or not, they have a huge impact on a large number of you. And when they show you that they're winning, and that's awesome. I love seeing it. I am not looking down on anybody. I'm trying to give you all proper perspective, even the folks that are winning, because what you're doing right now and you're winning, don't be surprised if things change market-wise and then you can't find consistency. You're going to get punch drunk doing things that really don't make any sense as to why you're doing it, or increasing the level of risk. Right now, at the highest time in history of trading, we've never seen the volatility levels that we have right now. It's never been there. It's fuck you for other fixes there. Look at this, look at that. Dude, look at the daily ranges. Look at the daily ranges, man. Like, this is a dreamland for a scalper. But you can't be in there every 10 seconds trading. You can't. You'll get your ass handed to you. And with all this stuff with tariffs, more tariffs, no tariffs, India, Pakistan, we're going to do this, we're going to do that. Everything's a mess right now. All it takes is one little spark. And this powder keg is send this market any direction real fast and tear your head completely off. So having an understanding of why the market will go down to a specific level before it goes higher is narrative. That's not bias. Bias is a static idea. Am I bullish or bearish? Everybody in trading holds a bias. I don't give a shit if they say, oh, no, I used to trade like ICT. I stopped trading ICT and I got better because I don't trade with a bias. The fuck you do? You do. If you're going in long, your bias is just going fucking up. Nobody says their bias is bearish or I don't have a bias and I'm going to buy long when they're short or wanting to go short. These 20-year-olds got to pull their head out of their ass. They're trying so hard to be relevant, they're going to make up shit just to sound like they're smart. Because most people listening to them are fucking idiots anyway. They're listening to these people because they show you something they purchased with money they made off of sales and mentorship, being a part of my this or that crew, my community. And they champion one or two events in their entire time on social media where I was in this one trade where I made $1,000, bro. Blah, 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 blah. Okay, what are you going to do tomorrow? What are you going to do tomorrow? How about on Tuesday of next week? What are you going to do on Tuesday? Yeah, I know what I'm doing. I know what I'm doing on Friday. Every fucking day in the future, I know what I'm going to do. The only filter I have is my wife. If she wants to do something, guess what? Those changes are being made. Because I don't need to train. Who would you rather listen to? Somebody that has to keep your attention by pushing out all of their materialistic bullshit. Here's what I do. Here's all of my depreciating assets. Here's all the fucking things I'm wasting with insurance payments and all this bullshit. I'm barely driving them because I know if I drive them, when I do a resale, the value will be diminished greatly by the miles I put on it. Or someone that says, here's what the market's going to do. And it's none of your damn business. How much money I have, how much money I made, and what I live in and what I drive. See, you're either addicted to the attention that you want to give to other people, or you're addicted to your personal development. Now, I don't got time for stupid fucking people worrying about what color fucking underwear I wear. None of that shit matters, man. None of that shit fucking matters. What matters is, what can I learn today? How can I apply it to myself as a trader? And how can it help me avoid making losses that debilitate me and completely take me out of the game? And how can I think about this shit correctly? So that way none of this stuff will bother me. Even if I take a losing trade, it doesn't upset me. That's my teachings. Because I'm not talking to you on X. I'm not talking to YouTubers. I'm not talking to people that went to my mentorship. I'm talking to my own children. I'm their dad. And when I'm talking all the time, if I'm speaking about money, making money, not losing it, holding on to it, and how to navigate problem areas, I'm talking to Caleb. I'm talking to Cody. I'm talking to Cameron. I'm talking to Kaden. I'm talking to my daughter. And no, you don't fucking know her name. And I'm not going to reveal it to you. It's always been an alias. She had to fucking move out of state because she's fucking weirdos. Some of you have no idea how a boundary is. It's respectable. And some of you expect levels of information that nobody would be comfortable giving. Show me this and show me that. How about I just fucking told you what the market's going to do every single minute? From the daily chart down to the minute chart. You're not content with that? You want more? Fuck you. Go somewhere else and find something what I do. You're not going to find it. And if they do it, they'd be selling it. They'd be out here blanketing my posts and saying, look, here's what I do. Here's what I do. I'm calling this, I'm calling that. They go away like roaches in the lake. Come out here and show it. They run away. I got nothing to lose. I got nothing to lose because I know my shit works. If you listen to me and the rules that I lay down, tuck them in these really long-winded bloviations of bullshit. It's going to help you to listen to it, but I tuck it in there because I know there's a lot of lazy people. And I can't stand laziness. It pisses me off because some of you want me to give it to you without any effort. You don't deserve that. My own children don't get it like that. Why the fuck would you expect them to give it to you like that? If anything, I would lay it in your hands like that. If Caleb was here right now, right here, right now. He would tell you, he ain't lying. You're right. I make them work their job. I make them build their menial jobs. I make them do that. You want to know why? Because that's what built me up. The tenacity I have, I don't ever, ever want to go back to having to do that. Ever. I'm never going to work for another fucking man or woman. I'm never going to fucking do that. I put myself in a situation that I will never have to ever do that. Whether I take a trade ever from now to the last time I throw out crap. I never have to do that. I don't have to put a fucking another video up on YouTube. In fact, I can't stand doing it. I hate it. It's fucking nerve-wracking to me. I can't stand it. I'd rather teach like this. And some of you don't like this. But this is what I want to do. Because this is the stuff that matters. This is the things that make you or break you as a trader. And 20-year-olds ain't been around in the game long enough to know this stuff, unless they heard it from people who've been doing it longer, and they parrot it. They regurgitate or say it verbatim. I don't want my children to do what they do for the church. I don't want them. But I know eventually it's going to kick in for them. They're like, you know what? That's not breaking off like that. So I have to roll my sleeves up, show him that this is what I'm doing. And they're going through it just like you are. I fucked around for 6 years when I first started this stuff. I had it figured out in 3.5 years. But I still thought I could do more with it. And I tinkered around 2.5 more years. That's the part, that 2.5 years made it like, you ain't telling me I don't know what the fuck I'm doing. And I was doing all the wrong things at that time, 2.5 years of doing stupid shit, trying to make something better than it already was. At 3.5 years, I've had what you're watching me use in front of you right now. And a lot of things are nice. I promise you this. If I showed you everything I could do, CNBC and everybody ever that fucking place, even when I talk to the newscasters outside trying to get me fucking talk to them. It's just like that, folks. It's just like that. And I love blurring that line because I want a lot of skepticism. So I want that because I plain view doing that. Think about how many people follow me. I'm not bragging. I want you to think about this. Think about how many follow me on YouTube. How many are here right now listening? Look at it. Look how many people are listening right now. They're not listening. And they're the same people that are not even subscribed to my channel because 95% of my comments are from people that don't subscribe. So that means they're a fair weather student. That means, well, you know, let me go see what this guy put on YouTube now. I put more effort into these discussions than anything I've ever put on YouTube, and I'm not getting paid right here. I'll prove it to you again. I'll show you that there's no monetization on X. I don't have any monetization in Telegram. So the people that posted that shit, I wouldn't even know how to do that on Telegram because no ads roll in my Telegram channel. Come on. Ad revenue is trash money. It's garbage. I use that for my daughter. That's what that's for. Dad, I need help with this. I could use this. I need new furniture over here. My car needs new tires. It's like a slush fund. That's all it is. And when we have vacations, I draw from that. That's it. It's not a lot of money, folks. It's only $200,000 a year. I am not living on $200,000 a year. I blow through that all year long. What happens then? My property taxes are many times more than what you earn a year. Hello. I'm talking to you in the most down-to-earth way I can. And there's nothing for me to monetize in this. I give everybody else the permission to use these recordings, and they post it on the YouTube channel. And what I teach you in these settings is just like we would be if you were in a one-on-one back in the 90s with me. But I would be doing it at the start. And only being with me for 1 week was hard. But I had students that did really well from that. But I didn't have a lot of students doing real well. Because 1 week, how much note taking can you take? Think about how much I've talked today and how much you've wrote down. So you think that all this stuff is grandiose, egotistical, showing off, being pompous. It's not, because you're going to get to that level in trading too, where you think your shit stinks. No, it says the market's going to shit. It suddenly does. What are you going to do? How are you going to deal with that? How are you going to internalize your future continued success on short-term adversity? Because when you have adversity in these climates right now that we have in this volatility, these levels of volatility that we have right here, right now, you cannot get a case of the ass and say, well, damn it, I'm in board, man. I'm going in, I'm getting it back, and I'm taking a pound of flesh with me home too. You'll blow your accounts. You'll blow them. I'm trying to remind you, as someone with 3 decades plus experience, I've seen every market condition that's ever been there. Ever. And this is the most difficult time as a trader I've ever seen. And these 20-year-olds that walk around, they act like that, you know, this is the easiest thing in the world. No, it's not, bro. No, it's not. I guarantee you, hook a heart rate monitor up to your bullshit, live stream it, and do that. I guarantee you, you're clocking 180 fucking beats a minute. I guarantee you, you're doing it. I guarantee you, your blood pressure's sky fucking high. I guarantee you it is. Even in your bullshit demo accounts that you're trading these prop accounts, because the outcome means something to you. You have to respect it. You have to respect the level of risk that's on right now. But you never hear these young men come out here and tell you until they blow their accounts. And the ones that have character, the ones that are honest, I have every bit of respect for them. When they say, man, I tried to do this and I got my ass kicked. Look around, you'll know who I'm talking about. And I have utmost respect for those individuals. I know you guys don't like when I talk about Patrick Whelan. You know what's charming about him? He's funny. He's a diamond in the rough, though. Because what you don't realize is that was me at 20. That was me at 20. $17,000 a week coming into my hands, and I didn't ever have a job that made more than $200 after taxes. You could have told me nothing about how I wasn't the shit. And I was wasting money, blowing money, and things were a lot cheaper back then. But you know what I like about that? He found his balls to come out and say, I did this, and it didn't work out, and I had nobody to blame. I fucked it up. And I told him privately, and he came back with some bullshit. No, you're not going to teach me, blah, blah. I'm trying to teach you, bro. I'm encouraging you. That's all I'm trying to do. I'm an audience member. That's all I am. I'm an audience member. Don't lose sight of what you're doing it for. And I have openly and privately gave that man my respect for the times he's done that, where he's came forward and said, I fucked up. I blew this account. I blew that account. You don't see that a lot. You don't see that. And people need to see that shit. They need to see it. Not just the fast cars, the vacations, all the people you hang around with. It looks like a carnival atmosphere, doesn't it? That's showmanship. But when he pulls back the curtain and says, you know what, I'm working my fucking ass off. And I had a rough week. I had a rough April. He made money, but he is admitting to you that he had to work his ass off for it. That, to me, means something. That's the shit I want to see. That's the kind of stuff, not just from him, but everybody else, because everybody else is walking around like they have sunglasses on and, you know, walking on rainbows and fucking sunshine. Sammy fucking sunshine. Nothing ever happens to them. I've admitted, even though you see what I'm doing, I'm calling before it happens and I'm doing it. It ain't easy. It is not fucking easy. Easy would be me doing every 20-minute trades. I'm not doing it. I'm respecting the measure of risk, the level of risk. And when these guys come out here and they hold your attention with all the materialistic stuff, and they never come forward and tell you their adversities, you need to unplug from them motherfuckers. Unplug. Because all they're doing is captivating you with materialism. And how much are they really giving to you that's useful information besides entertainment like Lifestyles of the Rich and Famous used to be? You ever watch that show as an older person? I used to. During the show, I feel great. Like, wow, this is amazing. At the end of the show, I'm back to, I only make $180 a week after tax. What a fucking loser. And it's depressing. But then I start looking at how many more days it's going to be until the episode comes on again. That's what you're doing with social media. You're worshiping these people. That's why I don't worship me. I give you nothing materialistic. I show you the goods. Here's what price is going to do. Because that's the only reason why you should listen to somebody about trading. Who gives a shit what they own? Who cares? I could be renting stuff. They'd be like, oh man, I should do this. Fuck that. I'm a simple guy. Simple guy. A Corvette, I can afford any car out there. Plural. I can buy a Lamborghini every single week. Cash money. I love Corvettes. That's my dream car. As a little boy, and I live my life like that. I like simplicity. Even though you think my stuff is complex, it's simple. I have simplified it. But see, what you're doing is you're trying to apply everything. And the simple thing is knowing is the market going to go up or down. It's drowned by what's the COT in the traders report say? What's the relative analysis between euro and pound? Which one's failing to make a lower low? And let's add into it seasonal tendencies. And let's add into it 15 other markets because that's going to help. All that does, sincerely, this is what it does. It gives you more shit to worry about. I've shown you last year and this year by looking at one market in a closely correlated market, the S&P. You take everything I've called in advance and then executed and showed you it, times that by 20 accounts times 5. Nobody's made that much money in profit, ever. And I had 2 of them come out and facetiously tell you basically, don't even fucking try it, Michael. And I never would. I would never give them my personal information. But I really strongly contemplated making friends with 10 special individuals. 10 privately selected individuals that have access to what I'm doing. Scale back just a little bit, just to be under the radar. I want to test. I want to test these prop firms. I want to test what they're willing to pay out. And everything documented so you can see when they don't do it, I'm going to open a can of whoop ass and show the whole fucking world. This is why you don't want to do it. You want to make your money. Don't try to build up a big amount of money there. Get enough money to go into a lot of things. That's what the real business is. I'm going to come here and troll one people first. So here's my first response. I'm coming for you. You don't know where I'm coming from. You don't know how it's coming. It's coming, baby. Woo! It's coming in. Prop firm, day of reckoning. I told you I've been working on a project. I told you I was working on it. And guess what? You have fucking nobody to blame but yourselves. Because you have fucked people over constantly. They're making money. Well, let's come up with some bullshit rule. Boom! You're banned. Boom! You're closed. You broke this rule. Keeping endless numbers of fucking new rules coming up all the time. And you make it impossible. Trading ain't nowhere near like that. You can't hold a trade past this time. You can tell me I can't trade that way. Yes. Yes. Don't worry, I'm not going to regret your shit. Everybody's doing well with it. It will still exist. I'm just going to wait for them to pull the rug and say, they can't pay out. No. That's just the embarrassing stuff. I'm telling you, it's coming in advance right now. It's coming. And when these people come out and show you how they traded, what they did, and no fucking rule got broken, except for something they Mickey Mouse will ever ask. Then the smart people will say, you know what? I'm not going to try to make my career out of it. I'm going to take a couple $1,000s out, fund myself, and leave them in the dust. There are people, and a lot of them are students, that are fleecing them. on the regular. But I want to see the boundaries, how far it can be taken within their bullshit rules. See, some of you snubbed your nose when I said $40 to $50 million because that's exactly what I would do inside of 1 month. With the bullshit that they have right now, 20 accounts, up to 15 contracts, I don't need that. I'll do 1/3 of that. Don't take my word for it. You can math what I've shown you. There you go. Motherfucker, walk the camera. It's just numbers. It's just that. These setups are going to be there all the time. These top terms won't be. I told you last year, there's going to be some regulators stepping in soon. A lot of these motherfuckers are going to be surprised when they show up at their ass. Say, surprise, motherfucker. Yep. So if you're a high roller and you're pulling out big money with it, it'd be very, very important decision making on your part to navigate that and start making sure that you're able to pull out what you have. Because you're going to see a lot of them just stop. One of them's changing right now. I think that's it. But the regulated broker ain't enough. You're trying to go with the prop firm. I don't even need to trade at all. How about that? But your pursuit of perfection is your very problem. And you think the prop firms are the best way to go about it. They're not. So now think about this for the people that have suffered just recently in the volatility and hurt themselves financially. You're using quote unquote a prop firm. They're not even prop. They have no money that they're giving you. They've never placed any of their own physical assets, money at all in your hands. So it's fraud from Jump Street. You're not trading with prop funds. You're trading with demos that you're paying for. Now, don't get it twisted. I understand. I have students that have milked these people. But that's the climate of what it is that you're doing. Okay? You're playing with demo accounts. You're paying for them. And you're gambling with them. And you're gambling with them at the highest level of difficulty that trading has ever seen. And you're surprised that you're failing? You're surprised that this is difficult? See, it's not real money that you're losing. You can only lose what you put into it. Ask the people that have quietly spent $20 to $15, $30,000 on accounts. That's feeling a good idea then. Because they're pushing too hard. If they just would have did one micro, use a realistic stop loss of 50 handles. One micro, 15, into the product. So, I was right. Start allowing credit cards. That was it. You know what that also is? That's cash grab. They know they're near the end of their life cycle, so they're getting wherever they can. I mean, how many prop firms have you seen go out of business? Just stop. Class action lawsuits brought against them coming up. Woo-hoo. Believe me, folks. You don't want to make your life there. If you can get a couple $1,000s out of it, okay, great. You don't need to work very hard or very long to get that. But go into a brokerage firm that's regulated. And no, I'm not going to name any of them. I'm not introducing brokerage. No one's going to accuse me of that, ever. I had a brokerage firm which reached out to me through a second party person. To know that person. hey, very good. And I responded that I appreciate the offer, consideration, but I never do affiliates, ever. Because I want my opinion to be natural. It needs to be organic. No one pays for my opinion. If I like something, I'll say I like it. If I don't like something, I'm going to tell you I don't like it. And I don't care about your opinion. You came here to watch whatever I say or do. Wouldn't it make sense if I was being honest and told you what it is I like and don't like? What benefit is there if I say this product, this service, this broker, and they're monetizing their relationship with me telling the public that it's good, when I would never use any of them? I would never do anything partnership like. I turn down millions of dollars every single year just because of that. I have a lot of influence, and I'm responsible with that influence. I could be fleecing all of you right now, and I'm asking you to consider the medium I'm using right now. I'm making nothing on my Saturday talking to you, giving you a calibration, a reset. This is how I should think. This is what I should not be trying to do right now. I blew it. Even he said it's kind of hard right now. And I can look back at it realistically and say, you know what, I pushed too hard in an environment that I shouldn't have. I demanded too much from my own personal trading in this current condition, and it was unfavorable. And I should not be surprised by it, and I should not be demoralized. I'm going to learn from this. The proper one. If my sons would have done this, hurt themselves, president, it's the same thing I did. The whole lot of but then you know that. But you keep doing that, listening to something different. And you don't listen to things that are right. Despite all these people out there in front of you, trading in these environments that are more difficult than trading itself, prop firm. All those rules that you're forcing yourself into, they don't exist in a brokerage account. They don't. That's not even a real perspective of trading. What you're honestly doing is you're making it an Olympic feat just to be profitable, not make a lot of money, just be profitable. They gear it and they rig it in such a manner where you are absolutely assured if you push just a little bit harder than you should, you're going to go back. A trailing stop loss that goes up as you make money. Get the fuck out of here. Get out of here. You can't build a cushion adequately as you would if you were trading with real money. They know by squeezing that noose tighter and tighter as you go, you're going to think about it. That greed's going to be in there, and you have to work. Well, work me, blow me, account, pay every cent. Straight, heavy leverage. If I get it, I'm going to pay out. That's what you find yourself doing. When I'm taking trades, and people that trade with real money in the account, we're not thinking about, should I do this or should I do that because it's a trailing stop loss and I have to. Well, fuck all that. You have literally stepped into an arena where you have next to no chance. You're trying to do something. But somebody that does have experience, somebody can walk through there and moonwalk through that motherfucker and bankrupt every single one of them, they would never let me take that down. So we're going to have to go through third party. I'm going to have friends and family members that have friends that won't be associated with me. And we're going to test the boundaries of these companies. 10 per country, 10 per company. So that way you evenly distribute everything. And we're going to see what's what. We're going to see, will they really pay you out? Will they really stick to their own rules? Because I can beat these fucking rules they have. I can. It's easy as shit. Easy as shit. People are going to do everything I do. brokers. You have to be like John. They get to see everything behind. And I'm going to throw in some music trades, a couple little dry runs of draw down here, draw down. But when it matters, it's going to rock it up. You'll see them. You'll see them after a couple weeks because you're looking for them now. And when you think you spotted them, they'll go into a tail stand, draw down. And then it's going to happen. And then we're going to show the world what your company's made of. Is it bullshit, lies, and trying to force people to lose money? Or are you really going to pay out? We've seen record payout. It's not anything to do with taking someone's record. I don't know. I have lots of lucky people are the baddest motherfucker that's ever stepped in these markets. We're going to test you. We're going to test you and your ability to pay out. And as soon as you say no, I'm putting that shit on fucking blast. It's going to be on every fucking social media account I have every day. For 60 days. Stop. I'm going to copy your fucking account handles and everything and point everybody to what this did not happen. What do you think is going to happen next? Think there's going to be a long line of people waiting for the next fucking discount code? Nope. You're going to be trolling me. You're going to be on your shit. Now, you know, spend time strategizing. But you had everything. You thought you had fun. At my expense? No, honey. You're going to get fucked. Long and deep with no loot. And ain't a fucking thing you can do. There's nothing you can do about it. You can't stop it. You don't even know where it's coming from. It's absolutely 100% fucking legal. What are you going to do? Nothing. So I suggest you better fucking pay out and use this phone and come knocking for the earned profits. Say no to them. None of them are influencers. None of them have ever be able to say, well, there you go. Say they plenty of all of you. So are they going to operate like a business that they claim to be? Or are they fucking scamming frauds that most people that know what's going on understand that? Your broker is not adding new rules every day, every week to increase the difficulty of how you're going to make money. It's not how it works. And when regulators finally step in there and start pushing their dick into them deeper, they're going to have to pay all that money back. There's a lot of people that are frustrated about this stuff. Some of them are my students. Some of them aren't. Even treated unfair. Take advantage of it. And your company's profitable. But anyway, just want to share with you today. Kind of get you gears going. I'd be making a shorter list of rule changes if I were you in the prop firm companies. That's it.